AM 1060 WMEL. The views expressed on the following program are those of the hosts, callers, and guests, and are not necessarily those of WMEL staff, management, or advertisers.
This is Joe Steckler, your host for Helping Seniors, the television arm, the radio arm of the, what a bad day today.
Helping Seniors of Brevard.
This is Helping Seniors of Brevard. It sounds like I'm the one, Bill, that needs help today. But thank goodness this is talk radio, and we can recover from it. Even Vince, the panel operator, he's laughing in there, too. So, you know, if you forget, Bill.
You're not the only one having a bad day, Joe. Don't worry.
Okay. You know, all of you listening, just like Bill, me hearing this, and Vince here at the station, there's so much involved in putting a radio, a television show, writing articles for newspaper, writing columns for newspapers. Over the years, Bill, how many times have I called you at the last minute and said, can you give me a column on what an elder law attorney does, or give me something about long-term care? I've asked you for that on short notice, right?
Yes, you have.
And the reason I did is because I knew Bill would give me what I needed so we could meet a deadline and get a publication out to you. But having said all that, I just like to once again say this is Helping Seniors, and we are designed to inform, to educate, and to connect seniors and those that care for seniors with resources. Our Kate Geiser, our information specialist, can be reached at area code 321-473-7770. And folks, I told Bill when I in a studio here, I just got through reading a report to the president on hearing devices, another on the prescription drug problem, and just yesterday a report on long-term care. So at the last minute, Bill and I decided to do our show on long-term care today, and we're going to throw some statistics in here that I hope will help you take another look at what your plans are and how you might modify your plans, and Bill can provide a little insight into that too. But the people that help us do this show, Kindred at Home, it's Kindred Hospital. It's a hospital right across the street from the airport. The difference between Kindred folks and Holmes, Wistoff, and Parish is that Kindred is a 60-bed hospital that takes care of the long-term patients that can't stay at the major big hospitals because they need those rooms in the hospital, and they're just not designed to take care of long-term in-hospital patients, and that's what Kindred does. But having said that, Kindred Home is one of our sponsors. The Eye Institute, Dr. Lee Sheldon, Bill Johnson, elder law attorney, our panelists today. This radio station, Wistoff Hospital Systems, Levin Home Care, Ebony News Today, Atlantic Shores, and Riverside Senior Resort, and Creative Designs by Carla. So, you know, we have a lot of people that all Bill help seniors, but when it gets right down to it, the person that really has to help that senior is that senior himself.
I would agree with that, at least educate themselves.
Yep. So, to that end, I was telling Bill before the show started, folks, and all of you need to know this, and I ask that you get a copy of Senior Scene magazine. It just hit the street today. And in Senior Scene magazine is a one-page spread where John Fredrickson has published the monthly calendar for the Helping Senior television program aired on Channel 499 and 199. He has listed by time and date 18 shows a week by title, who's on it, and what time the show will be. It's an amazing schedule, and John has done this because he's on our advocacy group panel, and he is dedicated and devoted to doing what he can at his level to help Brevard County become really, truly elder care friendly.
Now, Joe, is Senior Scene only available in Brevard County?
I think John's distribution points are all in Brevard County, but I do know that we are getting calls from people outside the county because we had a lady called us from Christmasville, and that's over in Orange County, I think.
Okay, I was just asking that because our scope of our radio coverage has greatly grown these days. So,
Yes. Yeah. Well, we with this new transmitter we have here, the 50,000 watt transmitter, our radio coverage, folks, has quadrupled. We're no longer just a little coastal station. We reach all the way down to Fort Lauderdale north, way past, almost to Jacksonville, I think, right, Vince? Nod your head. He's nodding, yes. And it's all the way up to Jacksonville and all the way on the other side of Orlando. So that's tremendous coverage. And for those of you listening, if you've got friends that are in business and they want to invest in good, challenging advertising, and especially if their business is geared towards taking care of seniors, think about contacting radio station WMEL at 631-1060, 631-1060. And I get it right? No, Vince is going to correct me.
No, it's area code 321-241-1060.
241.
241-1060. There you go.
The phone number is 321-241-1060. And you can get all information about advertising rates. And it just makes sense to me, folks. If we're trying to brand Brevard County as really being an elder-friendly community, then we need to help everybody understand who are the participants in an elder-friendly community. And frankly, we have
I was going to say, you might want to let everybody in on why we focus on the elderly in Brevard County.
Why?
Because we're one of the largest elder populations in the state.
Right, we're the 24th largest elder population in the United States, and that's, I'll never forget the number, 3,060 counties in the United States, and we're the 24th oldest. That was the last time we ran the numbers, and I'll bet you it might be higher on the list now, Bill.
And we also rank very high in the per capita as well.
Yes. In fact, in Brevard County, we have more people over the age of 65 than we do under the age of 18, yet there are so many initiatives that want to funnel more money into caring for children and not elderly. And that's something I don't. Bill, you're an elder law attorney. What do you say about something like that?
Well, I guess those initiatives are different initiatives, though. I mean, you're looking at different sources or pots of money that are made available to people. But I would agree with you. I don't think there is enough services or even preparation for the coming demographic wave.
Well, you would have thought that when Scott was elected governor of Florida, with his background in hospitals and caring for people, you would have thought that we might have seen a little more enlightenment on aging problems, yet it seems to have gone the opposite way. I think under Scott's tenure as governor, the numbers of people on the waiting list for Medicaid have increased.
I just saw the numbers today.
What are they?
There are 53,000 individuals on the waiting list for all programs, which would be the long-term care diversion waiver, the community care for the elderly, the Alzheimer's initiative money, and a couple other programs. The actual number of individuals on the long-term care diversion waiver waiting list is about 43,000. So that's kind of how it plays out.
Wait, a long-term diversion, that's the old Medicaid managed care program.
Correct.
And there are 43,000?
Yes, but for all programs, because sometimes people are told there's no money in the long-term care program, go ahead and apply for community care for the elderly,
right,
or something like that. Well, those waiting lists the number of individuals on all those waiting lists for senior services is 53,000.
And that would include the old Medicaid managed care program.
Yes.
So 53,000. Yeah, it makes me feel a lot better. There's only 53,000 people are waiting for services. That's really great.
Yeah, that's, well.
Folks, not to make light of a subject.
Hey, and just so the people listening know, to get on that waiting list, you virtually have to have 1 foot in a nursing home. I mean, you have to be pretty bad off before you can even get on those lists.
Yeah, because the lists are structured on a 5, 4, 3, 2, 1 basis, meaning if you need help with 5 activities of daily living, things like cleaning, cooking, driving, getting to the doctor. There are so many things.
No, it's walking, transferring, bathing, dressing, eating, and toileting.
Okay, all right, okay. If you have one of those,
if you need some help with 5 or more of those, or if you need some help with 4 or more plus supervision of medications, or if you have a diagnosis of dementia and Alzheimer's and require some help with 3 or more of those, or if you require total help with 2 or more, or if you have a degenerative or chronic condition requiring daily nursing services.
you could be a 5.
Well, that would be one of those. You have to meet one of those, then you get rated based on how frail you are, and that rating is from 1 through 5.
1 through 5.
The 5s are at the top of the waiting list, the 1s are at the bottom. If you're a 5, generally you'll be on that list. We're telling people a minimum 6 months. And
6 months.
Yeah, and if you're a 1, you'll be on that list several years. So,
because every time, if you're a 5, you got a pretty good chance. You're a 4, a 5 comes up, you drop down. Imagine if you're a 2 and you're waiting for help. And 2s can be in pretty bad shape.
correct.
So somehow I think the numbers today, Bill.
The other thing that's interesting about that whole list is your ability to pay for services doesn't matter about when you get put on the waiting list. So you could be a 5 needing services immediately, and if you're out of money, that doesn't move you anywhere up on the list. You understand what I'm saying?
I do.
Or you could be in assisted living and you're a 5 and you're out of money. You can't pay the assisted living anymore. That still doesn't move you up the list at all.
So what happens to those people?
Well, a lot of times the assisted livings eat the payments.
They have to keep them, right?
Yeah. Sometimes they just accept whatever the person's income is and hope that they eventually get approved.
So a nursing home,
or sometimes, the families make up the difference.
This is something that we don't really think about a lot. Say an assisted living facility could charge $5,000 a month, and if the family can only pay $2,200 a month or $1,500 a month, that's all they get.
Sometimes that's the way it works. Yeah.
Yeah. And based on the numbers, you figure out how many numbers can be placed in an assisted living facility. How cost effective is it, or can they have to maintain a certain profit margin in order to stay in business?
Correct. And also it's how busy it is, what their census is.
Yeah.
If they're at 99% occupancy, well, they're not going to just accept $2,200 of a $5,000 bill. They'd rather move you out and get another person in there paying $5,000 a month.
And I don't blame them.
Yeah. Now, if they're at 70% occupancy and have a lot of empty beds, well, $2,200 a month's better than nothing.
Yeah,
So.
and I've seen the ball swing that way back and forth over the 27, 28 years I've been involved in with assisted living facilities and nursing home care. Nursing homes is not quite the same as it is with assisted living.
And the reason for that is up until recently, there's been a moratorium on building new nursing homes. So that's why you've seen nursing home prices steadily go up, where really assisted living prices have kind of flatlined because we're building so many assisted living facilities, they're all having to scramble for people. Okay. And, the law of supply and demand. We've got an oversupply of beds and an undersupply of people. So, that helps keep that assisted living price down. Whereas with nursing homes, now we have seen them getting all packed almost year-round now here in Brevard County. And subsequently, they can be much more picky on who they have and what they charge.
I over the last several months, I've been able to attend opening ceremonies at several new assisted living facilities. I just went to the new opening of the Riverview down in Palm Bay. It's absolutely gorgeous. It really is. And their prices are not bad at all. They're extremely competitive with others in the market. And when you go into facilities, I went in to pay a call on Heidi, who is the director at Hibiscus Court. I went in to give her some flyers on our car drawing and just say hello to her. And I saw a gentleman out front I've known for 28 years. He did the first barbecue we did for the Alzheimer's program. And I said, "How you doing?" And he says, "Great. I love it here, Joe." He said, "The place is great." He said, "They really, really know what they're doing." And when a guy I have known for 27, 28 years tells me he enjoys being where he is, I know he's happy. And that's what the facility should be. If Hibiscus Court and his new facility's on, which is Jerry Kennedy is the new manager over there, and they're going to have openings, an opening for the public on June 18th, and everybody's invited to attend. Heck, go take a look at some of these places, folks, because what Bill and I are eventually going to get to talking about here today with long-term care, this is something you might want to consider factoring into your plan. And quite frankly, some of these places are more affordable than you really want to think. When you start thinking about what your insurance costs are and what you're paying for living costs, and see what they do, a bunch of things, like old Dave Ramsey talks about here on this radio station for 3 hours a day. Put the numbers down on a piece of paper, what the assisted living facility would cost you and what you're spending to maintain your home. I think you might be surprised. What do you think they would, Bill?
Yeah, I think it would be, it depends on how much care they need. But
Yeah.
just the room and board numbers were probably about even.
Yeah.
Yeah.
Yeah. So what really, Bill, is long-term care? Now, you're going to tell people what it is, and I'm going to throw numbers and ask you some questions about numbers. I'll look at the numbers. You talk to the people.
Well, I think long-term care is any kind of care that you need longer than 100 days.
Longer, they would keep you in your home longer.
Yeah, longer than 100 days. And whether that care is delivered to you at home, in an assisted living facility, or in a nursing home, it doesn't matter. But, generally for a long-term care policy to kick in, you have to have a 90-day elimination period, meaning you apply for benefits and they won't kick in the benefits till 90 days later. And for if you are in the hospital and you go to a nursing home, you would usually go into the nursing home for rehab, and that benefits about 100 days under Medicare, with Medicare paying 100% of days 1 through 20, and then everything about $161 a day for days 21 through 100. So after 100 days again, that would be a long-term event.
Yeah. What you just said is something many people don't realize. They think that long-term care plan is going to kick in right away. And if they sign themselves up to go into an assisted living facility, say at $6,000 a month, and they got a 90-day waiting period for their policy to kick in, they got to have $18,000 in the bank in order to foot that bill till that policy kicks in.
Correct.
And when that policy kicks in, the numbers I looked up, the average nursing home policy pays $159 a day. That's the average for the country. And when you multiply that out, that's what roughly
$4,800 a month.
$4,800 a month. So you still might have to come up with another $1,200 out of your pocket.
Right.
But
Or if you were talking about nursing home, you would have to come up with another about $5,000.
right, and that's why. And what a lot of people might not realize is that the average long-term care benefit is something like 5 years and 4 months. That's about how long they'll pay. However, the odds are is that the person will pass before you reach the end of that period. Correct?
Generally speaking,
Generally speaking.
yeah. The exception being people who have dementia but are otherwise healthy. You know, if dementia or Alzheimer's disease is the only illness and they don't have any other issues health-wise, they tend to last a lot longer.
Yep, yep. So what we're looking at for the future of our country with the demise of pensions, the requirement or the voluntary requirement to establish a 401k, and overall lower salaries. And this is something that you gave a pretty good dissertation on that to me before. It was going to scare my pants off. But it is scary. People don't realize how, when President Reagan started this trickle-down policy of the wealthy people helping the less wealthy. Explain that theory, what's happened over the years, Bill, because it's something people need to think about. Some people may not agree, but it's true.
Back in the 80s when Reagan was proposing that trickle-down theory, basically the objective was to give tax cuts to the people who employ people, and then they would reinvest those, the companies would reinvest that money into the technologies or research and development or into employee salaries and benefits. And basically the tax cuts for the companies and the people who own the companies would in turn raise everybody. Well, what we didn't count on is a global economy, and subsequently we give the tax cuts to the people at the top. And instead of them reinvesting in research and development or in technologies and companies or in their employees, they've moved them overseas.
Folks, we'll pick up on that on the other side of the show. Stay with us, because we're going to talk about long-term care in a minute.
AM 1060 WMEL, your home for Orlando Magic basketball.
This is Joe Steckler, folks. We're back live with Helping Seniors. I'm back on track. The purpose of the show is to inform, educate, and connect seniors and those that care for seniors with resources. Our information specialist, Kate Kaiser, can be reached at area code 321-473-7770. The sponsors for the second part of the show include Senior Scene Magazine, Hometown News, Spotlight Magazine, Seniors Helping Seniors, The Fountains of Melbourne, Courtney and Braswell, Joe Pons, Canadian Meds of Melbourne, Ear Care, Vitas Hospice, Handy Probe, The Space Ghost, and Aldea Today. And I mentioned Senior Scene Magazine, folks, and I explained to Bill when I first came into the show, John Fredrickson, the publisher of Senior Scene, is very much behind our effort to make Brevard County truly an elder-friendly community. To that point, he has asked Gary Fink, our media guy, to put all of our radio, all of our television shows on a page that he could publish in Senior Scene Magazine, and he came out with it today. It shows every television show that we have scheduled on Channel 499 Monday through Friday, listed by participant, title, and time. I highly encourage you to get a copy of Senior Scene Magazine and find out about the types of things that you need to find out about. And I had some statistics which I sent to Bill, and Bill pointed to this paper I have here, and he said, when are we going to talk about those numbers? We hadn't even talked about them, folks. And I'm going to just mention some numbers, and Bill's going to pick up and say why this is so important. Here's a statistic that I pulled out of a report on long-term care. And folks, the report actually put me to sleep reading it, but it wasn't because of lack of dynamite content. It was just the fact that as you try bunched over a computer to read something for 3 or 4 hours, it's extremely difficult. But here is an amazing statistic. For people aged, if you're at 60 years of age up to 82, if you pay $200 a month in insurance or set aside $1,568 a month for 22 years, you would have roughly $568,000 to pay for your long-term care. Now, how many of us can afford from age 60 to 82 to set aside $1,568 a month? Not very many. So $200 a month in insurance sounds pretty good, doesn't it, Bill?
Yes, it does.
It makes a lot of difference. Another one is that actually, folks, we have 360 million people, or 320 million people in the United States. 60 million are over the age of 65, and we only have 7.2 million long-term care policies in place. 7.2. Does that shock you, Bill?
That doesn't shock me. That sounds like the percent I've heard for a number of years.
Yep. When we started this, folks, in the 70s, there was roughly $30 billion in coverage. And in the 80s, that $30 billion in coverage declined to $15 billion in coverage. Now, before I was talking about the number of policies in place. Now I'm talking about the amount of coverage. And the number of insurers has now fallen from 100 insurers to less than 20 today. And I think that's really alarming, Bill. And that's all the more reason why, if you're going to get long-term health care insurance, you need to talk to people like you that understand the companies that have been around. And what would you say as an elder attorney? What would your comment be on that set of statistics, Bill?
Well, I think you need to find a company that's going to be highly rated, so that you're not paying into a company that's going to go out of business, and then you're going to lose benefits or get greatly reduced benefits from a company in receivership. You also need to be aware that you probably need to have some sort of policy where the benefit that it pays daily is going to increase, either a cost of living adjustment or a simple interest calculation or a compound interest calculation. So, $100 today won't cover $100 worth of services 10 years from now.
That's exactly right. In fact, I did look up the 2014 statistics, and I was amazed, Bill, that they had statistics as recent as 2014, because generally when you go into stuff like this, you don't get that close, do you?
No. Generally, it's at least 4 or 5 years older.
Yeah. So this study was put together very, very well, and the average potential value, or the potential value of claims that exist today, books out at $1.98 trillion. Trillion.
Wow.
That's a lot of money. The new claim reserves, folks, you have to have reserves in there in order to pay out of the policies, are $87 billion. In fact, the claims paid from 1992 to 2014, the claims payout was $95 billion. We're talking a lot of money, Bill.
That is significant amounts of money, yeah.
But think about my long-term care policy. Mine is roughly $4,000 a year, and my wife's is roughly $2,500. So $6,500 a year we pay for long-term health care insurance. That's less than what I would have to pay in 1 month if I was in a nursing home.
Correct. Your average month of nursing home care is roughly about 8,000 nationwide. I think the low is 7,100 a month in Ohio, and the high is, I think it's 114,000 a year in New York City.
These are
145, excuse me, a year in New York City.
But these are scary numbers. And the reason, folks, that I pulled them out so that Bill and I could talk about them was because you're never going to see these numbers. You're not going to read an in-depth report like I did and take the time to pull all this stuff out. I'm trying to pull out of there significant numbers that would make your hair stand up on the back of your head. Think about this. The number of people filing new claims last year was, in 2014, was 73,139. When you think about 73,000 claims in a population of 320 million, that doesn't sound like many. What it tells me is that way far too few people have long-term health care coverage.
Correct. I think the national average is, what, 5%?
Yeah, something like that.
Something like that?
Yep. I think that the number of claims enforced today in the country are 254,910 claims. Yeah, we have 7.2 billion people that have policies, but we have people filing claims of roughly a 250,000. And which probably stands right, because you're talking about the death rate and birth death rate in the United States. That sounds pretty good, but we're just touching the tip of the iceberg.
Right.
And what's scary, Bill, is that while the people that have this kind of coverage and can help pay their way, we have the millions that can't pay their way. And that's you mentioned something in the first part of the show that made me really think, and that was about Medicare and Medicaid. The 2014 statistics on long-term care were that there were $239 billion worth of policy in place. That's roughly 239. That's roughly 38% of the military budget. 38% of the military budget, and here we're talking personnel costs. These are just extremely high costs, and they're just. I don't know what I could do or say on a show short of getting Rush Limbaugh in here, screaming at everybody through a microphone, saying that, folks, start listening. Start listening to what elder law attorneys are telling you. Start saying, yeah, I can pay $200 a month in a cost of a plan if I can get the plan. That's another thing.
Yeah, a lot of people can't get plans or long-term care insurance because they have pre-existing conditions. And then you're kind of stuck either qualifying for Medicaid or self-insuring. And, as you were mentioning, nursing home bills are probably somewhere around $8,000-9,000 a month. Assisted living bills start at $3,600 and go all the way up to $6,000 a month.
And more.
Yeah, and more. And, you and me both have seen home health care bills as high as $10,000-20,000 a month.
Yep.
It's not unusual to see somebody who needs nursing home level of care at home have a $8,000 to $12,000 bill every month.
Yeah, and it's got to be paid.
Yes.
It has to be paid. You were commenting during the break about a disease called diabetes. How about just enlightening our listeners on what is happening with diabetes today?
Well, we're having an explosion with diabetes in this country, and that's a result of the explosion in obesity. And subsequently, we're having a lot more of heart-related problems with people, and we're having a lot more of other issues relating, strokes and things like that, relating to that. And interestingly, I saw a study that just came out that for the first time in recent years, the life expectancy in America has gone down due to this wave of obesity.
So, obesity is not something to be taken lightly.
Right.
And granted, there are some people, very few people, that have a weight problem that's not controllable. Very few. And
the thing about diabetes and obesity is it gives you these very acute illnesses that require lots of long-term care, like strokes or failing hearts, and subsequently your likelihood of having a long-term care situation has probably gone up dramatically.
And folks, every time Bill says one of those words, he looks right at me, and I consider myself to be one of those.
I'm not picking on you.
I know, but I've experienced all that darn stuff, and I understand it. I've had that stroke. I don't remember having the stroke. I don't remember it. I do know from what my wife and my grandchildren have told me of the wonderful medical help I got through the Wistoff emergency team and the first responders that came to my house. They did a fantastic job. And then the whole thing was marshaled through the emergency room experience at Wistoff, and then they took care of me at Wistoff, and then at Seapines. And everybody was part of a team that put me back together. And yes, my left side is a little weaker, and if I'm not careful, I do slur my speech, and I have to. I'm reminded about that sometimes by people, but I am so fortunate, Bill.
Right.
I'm so fortunate.
Comparatively to what could have happened.
Yes.
Yes.
But you and I have talked about some things we can't talk about on the air, but I think that you should, when Bill and I talk about something like this, folks, I think it should cause you to talk to your family attorney about what you think you have in place and what he or she might tell you you don't have in place. And I think that's a key thing. I think too many of us think that we have everything in place that we need to have, and we might not have it, Bill.
Right, and I think also your financial planner can help you with that too. I mean, most really good financial planners I know have some sort of tickler list where they go through it with the clients, and one of the things they always ask the client is, about long-term care insurance. If you have a long-term care event, how are you going to pay for it?
Yep. But I think some else that we, because I've been guilty of this. I've sort of maybe stated too often that maybe people could wait until they're older before they really think about getting long-term health care insurance. And I think a lot of it depends on how long do you want to pay, how much do you want to pay. But I think we got to think about another factor now. It's not just the cost and our ability to pay the cost, but we got to think about our ability to get the insurance in the first place. Right now, what you're telling me and what you indicated during the break and also on the show is that the incidence of diabetes and some of the other diseases because of our intake of food might require that we think a lot more about getting that long-term health care insurance a little bit sooner.
Yeah, that might be. And honestly, I don't recall if diabetes is a disqualifying factor for long-term care insurance. I know they generally don't like issuing policies to people who have, insulin-dependent diabetes. And that's, again, because of the implications of all these other potential long-term care things.
There's one set of statistics I do want to mention, though, and that's the in 2014, there was a total of 239 billion, folks, paid on long-term care. Included in that was $79 billion for Medicare, $70 billion for Medicaid, out-of-pocket expenses, $20 billion, and the rest of it lumped all into $70 billion. But what really got my eye open, Bill, you and I have always talked about, and people don't realize that 90-day stay in a hospital comes under Medicaid, or Medicare pays for that. And when you start thinking about $79 billion, the biggest chunk of that Medicare cost is that 93-day period.
That you mean the 100 days?
The 100 days, yeah.
Yeah, where they play
days.
100% of days 1 through
Yeah.
20.
So think about how many people have to go into a hospital and then into a rehab facility for 100 days to have that thing kick in.
Well, that's why there is this new legislation that is going to impact the Medicaid payment rates if the patient gets kicked back from the nursing home to the hospital.
What's this now?
Okay, so the hospital has a patient who, let's say, has a stroke.
Okay.
They get sent to the nursing home to do rehab for the 100 days.
Okay.
Now, if during that period of time that patient gets readmitted to the hospital, the nursing home gets a cut in the pay on that patient. I'm not sure exactly how it works, but I know that there is a incentive not to have patients going, from the hospital to the nursing home back to the hospital.
Well, okay. Yeah.
Yeah.
Well, that's part of the Affordable Health Care Act is if they're readmitted, that there's a huge penalty.
Yes, and that's what I'm talking about.
Okay. All right. Okay. Is that what you're talking about?
Which means that the nursing homes have to do a better job of taking care of the patients while they're there.
Okay. Okay. Yeah. It makes sense. But see, it took roughly 5 years for that provision of the Affordable Health Care Act to kick in.
Yeah, it's just coming into effect now.
Right. So what we don't know, and we keep finding out, is that years ago when I did the Monday show, I was talking about all these things are going to kick in under the Affordable Health Care Act, and a lot of people wouldn't believe me. They said I was out of my mind. I didn't know what I was talking about. Almost every one of them's been true. They are, and that's why whatever we've done and whatever we will do, regardless who gets elected president, if we continue on with this Affordable Health Care Act the way it is, and if the one presidential contender says that they're going to continue on this path and build on this really bad act, that we stand to make more mistakes, and we're going to pay the cost. And ironically, folks, I did tell you all this 8 and 9 years ago, that the plan that we have in effect today under the Affordable Health Care Act is the exact same plan that Hillary Clinton and Senator Tom Daschle promoted when President Clinton was the president, when Bill Clinton was the president of the United States. It's the exact same plan. So it hasn't changed, and the players change, but the plans don't change. So, and just in the minute we have, a minute and a half we have left, Bill, just tell our radio listeners what you think they need to do in order to go see an attorney, be a family attorney. What would you recommend?
Well, I think they need to either go talk to an elder law attorney or go talk to a financial consultant about long-term care and how they are going to pay for the costs if they have a long-term care event. Are they going to buy long-term care insurance? Can they afford it? Can they qualify for it? If they can't get long-term care insurance because they can't afford it or qualify, then what other options do they have? Are they a veteran? Do they have 100% or disability rating? Could they rely on something from the VA? Could they get some money from?
That's an extremely important point.
Yeah, could they get some money from VA aid and attendance to help
Yes.
pay the bill? Do they have the resources to self-insure? Or are they going to have to qualify for Medicaid? If so, what do they need to know about Medicaid so that they're in a position to qualify for Medicaid?
What you're saying is they can't afford not to ask questions.
Correct. And educate themselves.
It's education, and when it comes to healthcare and long-term healthcare planning, they can come to you for a consultation.
We do that kind of work? Yes.
Yes, you do kind of work and it doesn't cost a cent.
Correct. We do for consultation.
That's exactly right. That's how you get business, because you do a good job of it. Okay, folks, we're out of time. I want to thank you for listening.